Hello, very good afternoon to all. I'm Kelvin here again. Welcome to today's Daily Dose of Market Insights. Today will be a very exciting day. So before we start our gist of today's Daily Dose of Market Insights, let's have a quick look at the disclaimer first. And very good afternoon. Today will be Tuesday, the 2nd of April, 2025. So let's have a quick look at the disclaimer first. All right, before we kickstart our Daily Dose. All right. Oops. Sorry, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into today's latest intraday technical outlook on the broad-based cross-asset classes, let's have a recap what has taken shape yesterday in terms of news flow, economic data release, and their impact on the movement on this intraday movement of those broad-based cross-asset classes, ranging from the major US dollar pair, the major stock indices, and as well as the two key commodities, gold, XAU/USD, and West Texas crude oil. So we know that today will be a pretty much key day, which is US President Trump called it Liberation Day for US in terms of the announcement of his champion reciprocal trade tariffs policy that's going to be ignited against all major US trading partners. So let's take a look at the movement of the major US stock indices, yesterday. So what I could see is a rather volatile session in the US stock market. Initially, there was actually a sell-off on the S&P 500, and thereafter a recovery, a sell-off again, and only in the last hour of the US trading session yesterday, the market managed to recover slightly. So what I could see over here is that the S&P 500 and the Nasdaq 100 managed to see two consecutive gains, a second consecutive session gain yesterday, where the SPX managed to gain by 0.38%, the Nasdaq 100 0.82%, the Dow Jones Industrial Average almost unchanged, negative 0.03%, and the Russell 2000 managed to be also unchanged at negative 0.02%. So what I could see over here is that it's not a rather strong positive performance on the major US stock indices yesterday, despite the last hour recovery that's been seen on the S&P and the Nasdaq 100. But it's more pretty much because the Dow Jones Industrial Average and the Russell 2000, especially the Russell 2000, consists of the small cap company in the US that is primarily driven their revenue and earnings inflows from the health of the US economy. So what the movement of the Dow Jones and the Russell 2000 is telling us that market participants is not so convinced about yesterday's intraday rally on the S&P and the Nasdaq 100, and that has been primarily driven by the mega cap technology stocks, okay, that managed to help the fort in the last hour of the cash market trading session yesterday, where Microsoft and Nvidia both gained by 1.8% and 1.6%, followed by Google, Meta 1.7% as well, and Tesla, which is up almost 3.6%. All right, but rather the other state of the other segment of the major US stock indices didn't actually fare that well. All right, so like I mentioned in my daily dose yesterday, whatever rebound that we could see is more counter trend rebound within a medium-term downtrend phase that is still intact. So later I'll touch more on the intraday technical outlook on the Nasdaq 100 and the US Wall Street 30, representing the Dow Jones Industrial Average. And what's interesting over here is that gold price continues to remain firm yesterday, and it continues to trade higher. All right, so right now, as we're speaking in today's Asia session, it managed to see a positive 0.3% gain after hitting to a fresh all-time high yesterday at 3,149 before there's a minor pullback itself over here. And what you see over here is this is the 5-day rolling performance of the US dollar against other major currency as of 2nd of April. We're speaking right now. So what I could see is more of a sideways rangy configuration among the in the dollar strength. So dollar strength seems to be get dissipated, and it seems to us that right now is all the major currencies being trapped in the sideways range configuration as ahead of the today's 2nd of April Liberation Day announcement by the US White House on this reciprocal trade tariffs announcement. So what we could see over here is that yesterday's push up on the major US stock indices also been driven by this particular positive news flow, stating that USTR, which is the Trade Representative Office, actually has prepared for a new tariff option for Trump. All right, ahead of today's 2nd of April trade policy announcement on that reciprocal tariff. So a market view this as maybe something positive. Perhaps it will tend to actually tone down or potentially give some form of negotiation among those countries that's been hit by this reciprocal trade tariffs that Trump will announce later today in the US at the end of the US session. So later I'll tell you what is the timing of this reciprocal trade announcement that can be announced by White House today. So because of this news flow, the USTR, which is the Trade Representative Office that's in charge of international trade affairs for the US with the rest of the world, stating that they actually the office has started to prepare a new tariff option for Trump. So because of this potential positiveness, where maybe there's some leeway for negotiation, it could potentially, because nothing's being said about what is this new tariff options about, but market view this as potentially a chance where there could be some kind of staggered form of reciprocal trade tariffs that is being announced today, where it give a leeway for negotiation. So that also explained the last hour push up by the major US stock indices that we see on the cash market trading session yesterday, led by the mega cap technology stocks. All right. So now other news flow that other economic data is more pertaining to the state of the US economy over here that I will share with you guys will be the release of the ISM manufacturing PMI data. So manufacturing PMI data is considered a survey base, where ISM Institute, which is the survey compiler, send out a list of questionnaire to the purchasers managers in the manufacturing companies that is operating in the US. So for the first time for many months, the manufacturing PMI data for the month of March contracted to a contraction territory to 49. So in terms of PMI, anything that's below 50 is considered contraction. So market is expecting it to contract, but it's at the contracted was to 49 from 50.3. So if you look at the trend over here of the headline ISM manufacturing PMI data, very clearly it starts to seek a series of lower highs in terms of the trend analysis. Right, so over here, okay, let me put up the 10-year. Okay, so I could see over here is that it started to inch downwards, all right, over here at this point in time. And also, what interesting over here is that we start to see a contractionary of manufacturing activities in the US as being compiled by this ISM manufacturing PMI data for March. Its subcomponent, which is measuring ISM manufacturing prices, so it's called input prices, considered as the cost of doing business in the manufacturing industry in the US, that continues to inch higher. So market is expecting 65. It actually went up way higher to 69.4 in March, also above 62.4 that was printed in the prior month of February. So what it implies over here is that the input cost of doing business in the manufacturing sector in the US has started to increase, but however, output growth has started to decline. So that is actually a higher state of increased risk of a stagflationary environment in the US economy. That means, i.e., we have lesser demand, but on top of lesser demand, the cost of doing business also increases as well, right? So if you look at the ISM manufacturing, so the increase over here is considered as the highest, 69.4 for March, since December 2021. Okay, so that's close to about around a 3.5-year high, right? So very clearly, input costs have started to increase in the US for the manufacturing sector. That doesn't also gel well for the overall economic growth situation in the US economy. So that also potentially also supports the ongoing medium-term downtrend phase that is still likely to be intact on the major US stock indices. All right, so that covers the first segment of today's daily dose. So let us now jump straight into the second segment of today's daily dose, where I will cover the intraday technical outlook on the various broad-based cross asset classes, starting with the FX market. So before that, as usual, let me expand my screen so that you guys can have a better view of the charts. So let's start with the FX market first over here. All right, so for the FX market, let's start with the euro dollar. So the euro dollar continues to trade sideways yesterday. So what I could see over here is that it could start to be congested in the sideways range, at least from an intraday perspective. So it can't break above our first resistance that we highlighted yesterday, which is 1.0860, and it now traded below the 20-day moving average as well. So this is trading view chart. So what we could do is that we could actually plot a higher time frame indicator, like the 20-day moving average, overlay it on the hourly time frame chart, which I did right now. So with the lack of momentum that's being seen right now, where price action on the euro dollar failed to actually recapture its 20-day moving average since the breakdown of it on Monday, this Monday, our conviction to maintain a intraday bullish bias has been greatly reduced. So for today, we will have a slightly bearish bias to allow it to actually potentially trade within this tight sideways range. That means the bottom of the range will be the 200-day moving average at 1.0730. So we'll flip to an intraday bearish bias for today using 1.0860 as my short-term pivotal resistance level to have a bearish bias within this sideways range configuration. Sideways range configuration intraday support level to watch will be 1.0765 followed by 1.0730, which is the lower limit of this sideways range over here, which is the 200-day moving average as well. I think it's a similar support at 1.0730. Only a breakout and an hourly close above 1.0860 will invalidate today's intraday bearish bias on the euro dollar to see a resurgence of the bullish bias taking hold back again on the euro dollar, exposing the next resistance, intermediate resistance level at 1.0910, followed by 1.0940 slash 1.0970. So i.e. Flipping to an intraday bearish bias within this minor range configuration on the euro dollar on the intraday basis using 1.0860 as my short-term pivotal resistance for today. Up next, very similar, will be on the sterling dollar. So sterling dollar yesterday also broke down below the 20-day moving average and also broke down below the lower limit of this ascending channel support that I drew from the low of 11th of February, indicating the lack of upside momentum as well, and also the failure to break above our first resistance yesterday that we highlighted at 1.2980. So with that, our conviction to maintain that bullish bias has been greatly reduced. So we will actually flip to an intraday bearish bias stance for today using 1.2980 as my short-term pivotal resistance level on the sterling dollar. Near-term support level to watch on the intraday basis. First support level 1.2870, a breakdown below it exposes the 200-day moving average, also acting as a similar next near-term graphical support at 1.2810. Only a push out and an hourly close above 1.2980 will invalidate today's intraday bearish bias to revive the boost to expose the next near-term resistance level at 130.25 slash 130.40, followed by 131 figure next on the sterling dollar. So i.e. Due to the negative technical elements that I highlighted earlier on the sterling dollar, we'll flip to a intraday bearish bias for today using 1.2980 short-term pivotal resistance for the sterling dollar. All right, next up will be the Aussie dollar. So the Aussie dollar yesterday managed to squeeze up over here and is now trading right below the 50-day and the 20-day moving average, also coming very close to the minor swing high area of 26th of March. So I'll be using this bunch of resistance over here, 63.15, 63.30 as my short-term pivotal resistance zone. We will have a slightly bearish bias stand on the Aussie dollar, given the fact that the hourly RSI is now approaching the overbought level as well. First support level to watch will be 62.60 over here. Let me put it in writing. Okay. 62.60. Only a breakdown below 62.60 may see further potential weakness to retest 62.40. Right. However, if we start to see a push up and the hourly close above 63.30, today's intraday bearish bias will be invalidated on the Aussie dollar to see a further squeeze towards 63.60 level. A breakout above 63.60 level may expose the medium-term pivotal resistance at 64 figure next. Okay, so that's for the Aussie dollar. Watching this pivotal short-term pivotal resistance that we have for today at 63.15 / 63.30 with the first support at 62.60. Next up will be the dollar yen over here. So the dollar yen continues to actually trade below the pivotal resistance that we highlighted, so 150.40 level. So perhaps it will start to be inside this sideways range as well, 150.40, and the 20-day moving average acting as a support at 148.90, where it managed to survive yesterday as well. All right, during yesterday as well. All right, so what we have over here is that we will still maintain that intraday bearish bias, but now it seems to be trapped within this minor sideways range since the low of this Monday over here. 150.40 short-term pivotal resistance level, maintain that intraday bearish bias, but first support level to watch will be the lower limit of this sideways range, minor sideways range at 148.90. Only a breakdown below 148.90 may see further weakness to expose the next near-term support level at 148.20. However, if we start to see an hourly close and a breakout above 150.40 short-term pivotal resistance level, today's intraday bearish bias will be invalidated to see a squeeze up towards 151.30 next, right, which is going to correspond very closely to the 50-day moving average and as well as the 200-day moving average. So i.e., in a nutshell, still maintain that intraday bearish bias, but now be in this minor sideways range with the pivotal resistance coming in at 150.40. First support level to watch will be the lower limit of that sideways range, as well as the 220-day moving average, acting as a similar support level at 148.90. All right, so that's conclude the intraday technical outlook on the major dollar pair. So now let us turn our attention to the intraday technical outlook on the major stock indices, starting with the Hong Kong 33 over here. So the Hong Kong 33 yesterday managed to stage a bounce at our first support level at 22,980, but still can't break above our short-term pivotal resistance at 23,570, and it continues to trade within this minor descending channel that I drew from the high of 19th of March, with the first resistance, coming at around this level here, which is at this 23,370 level. All right, so still no change, still using the pivotal resistance level at 23,570, still maintaining that intraday bearish bias on the Hong Kong 33 over here. First support to watch out for will be at 22,980. Only a breakdown below 22,980 may expose the next near-term support level at 22,690 next. All right, however, if we start to see a price action squeeze up above the pivotal resistance level at 23,570, today's intraday bearish bias will be invalidated on the Hong Kong 33 to see a further squeeze up towards the next near-term resistance level at 23,820 / 23,965. All right, i.e., in a nutshell, still using 23,570, pardon me, as my short-term pivotal resistance level to maintain the intraday bearish bias on the Hong Kong 33. All right, up next will be the Nikkei 225. So the Nikkei 225 plummeted, sorry, pardon me, Nikkei 225 over here. So the Nikkei 225 plummeted as expected and hit our first support level at 35,115 exactly. But what's interesting over here is that the hourly RSI now has started to shape a bullish divergence, right? Very clearly, lower high on the price action, on the raw price action of the Japan 225, representing the Nikkei 225, but higher low as it hit a extreme oversold region prior on Monday and printed a higher low on the hourly RSI, as you can see over here. So this is considered as a bullish divergence, indicating that downside momentum has started to ease off, at least on the intraday basis. So with that, now there could be increased odds of a counter trend rebound to at least retrace this ongoing minor downtrend that has been in place since the high of 26th of March. So we are flipping to a intraday bullish bias for today on the Japan 225 for this potential minor counter trend rebound to play out, as long as 35,115 short-term pivotal support holds. Near-term resistance level to watch on the intraday basis, for this potential counter trend rebound scenario will be at 36,130, followed by 36,580. However, a breakdown and the hourly close below 35,115 will invalidate today's intraday bullish bias potential counter trend rebound scenario to resume the impulsive downward sequence to expose the next near-term support level at 34,680 / 34,520 next, and below it may see 34,180. So i.e., in a nutshell, due to the positive observation or the bullish divergence that's being flashed out on the hourly RSI, we'll flip to a intraday bullish bias for a potential minor counter trend or mean reversion rebound scenario to play out on the Japan 225 as long as 35,115 short-term pivotal support holds. Okay, next up will be the German 30 over here, representing the European, the major European stock indices, or the German DAX over here. So I could see that there's a price action bounce over here, and this price action bounce, interestingly, the last higher high on the price action that was being seen during the start of the US session yesterday, price action shaped higher high, but however the RSI shaped a lower high, all right, indicating the lack of upside momentum as we're speaking right now, as price action hover just below our short-term pivotal resistance that we highlighted yesterday at 22,760. So still no change, still maintaining that intraday bearish bias, supported by this latest bearish divergence observation that's being seen on the hourly RSI. First support level to watch for today will be slightly higher, will be this level here, this congestion level that is being formed in yesterday's start of the European session. Okay, at 22,410. Okay, let me put it in writing. 22,410. All right, only a breakdown below 22,410 may see further weakness to retest this Monday swing low area at 22,120 / 22,050. However, if we start to see a squeeze up and hourly close above 22,760, today's intraday bearish bias will be invalidated to see a choppy upward drift to revisit 22,940, followed by above it sees 23,230 next, which is the minor swing high area of 26th of March, and as well as close to this former medium term ascending channel support that I drew from the low of, okay, so it's a bit hanger, okay, from the low of the start of this year, right? So the data is loading, okay, it's a bit hang right now, right? So in a nutshell, still maintaining that intraday bearish bias on the German 30 for today, using 22,760 as my short-term pivotal resistance level. Two key intraday support level to watch. First support level will be 22,410. Only a breakdown below 22,410 may expose 22,120 / 22,050 next. All right, so that's for the German 30. Next up will be the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. All right, so for the US Wall Street 30 over here, is that what I could see is that the price action starts to trade sideways yesterday. All right, can't break above the 42,340 short-term pivotal resistance that we have as well, but also can't break below our first support level that we have, that was tested yesterday as well during the start of the US session before rebounding at 41,670. But what's interesting over here is that given the sideways movement on the price action, the hourly RSI start to shape a series of lower high, which is a bearish divergence condition as well, indicating the lack of short-term upside momentum. So with that, we'll still maintain that intraday bearish bias on the US Wall Street 30. No change on the key levels. 42,340, pardon me, will be the short-term pivotal resistance level. Near-term support level to watch will be 41,670 for sure, the first support, followed by 41,450. A breakdown below it may revisit this Monday swing low at 41,200. Only a sudden squeeze up and hourly close above 42,340 will invalidate today's intraday bearish bias to see a further upward drift to expose the next near-term resistance level at 42,570. A breakout above 42,570 may see 42,870 / 43,030 coming in next, which is the minor swing high area of 26th of March and the minor swing high area of 6th of March. So i.e. that's for the US Wall Street 30, still maintaining that intraday bearish bias using 42,340 short-term pivotal resistance level. Next up, lastly, will be the Nasdaq 100. So the Nasdaq 100 also starts to see a rebound. So this rebound is much more fast, much more we call it pronounced, higher high, led by the mega cap technology stocks, which I highlighted today at the start of my today's daily dose. Hit the upper limit of the short-term pivotal resistance that we highlighted yesterday, 19,490, before it starts to shape that bearish reaction candle at the close at the start of today's Asia session at the 8 a.m. mark over here, and now it starts to trade very sideways, small little candle. So no change, still using this for 19,490 short-term pivotal resistance level to maintain that intraday bearish bias on the Nasdaq 100 for today. Right, the Nasdaq 100 for today. Oops, let me push it down. Right, first near-term support level to watch will be yesterday's US session low at 19,125, where I managed to survive and stage that bounce over here. Only a breakdown below 19,125 may revisit this Monday's swing low area at 18,800 next. However, hourly close and the push up above 19,490 will see the continuation, will invalidate today's intraday bearish bias to see the continuation of this minor mean reversion counter trend rebound phase unfolding to the upside, exposing the next near-term resistance level at 19,770, which is the congestion area of 28th of March, and so correspond to the former minor ascending range support now turns into a pullback resistance that I drew from the low of 14th of March over here. All right, i.e. in a nutshell, still maintaining that bearish bias for the Nasdaq 100 using 19,490 as the short-term pivotal resistance level. So that's the segment of the intraday technical outlook for the major stock indices. So now let us move on to the intraday technical outlook on the commodities asset classes. Starting with Gold XAU/USD. So for Gold XAU/USD over here, it hit a fresh all-time high into yesterday's Asia session at this 3,149 level before trading sideways over here. So yesterday it managed to bounce off from the 3,110 short-term pivotal support level. So we have a bit of excess at 3,100 level, which is also the median line of this minor ascending channel that I drew from the low of 11th of March. So as long as this 3,110/3000 excess 3,100 short-term pivotal support level holds, we will still maintain that intraday bullish bias on Gold XAU/USD. Two near-term resistance level to watch for today will be 3,160, which is the upper limit of this minor ascending channel, followed by 3,180, which is defined by a Fibo extension cluster level. Only a push down and hourly close below 3,100 short-term pivotal support will invalidate today's intraday bullish bias on gold to kickstart a minor corrective decline sequence, exposing the next near-term support level at 3,076, followed by 3,060, which is the lower limit of this minor ascending channel and the former minor swing high area of 20th of March, and as well as 27th of March turns into a key near-term pullback support level. All right, so i.e. still using 3,110, 3,100 short-term pivotal support level for gold to maintain its intraday bullish bias for today. Lastly will be the West Texas crude oil. So West Texas crude oil rallied as expected. So West Texas crude oil rallied as expected and hit our resistance level at 72.40, which is also the upper limit of this minor ascending channel that I drew from the low of 19th of March. So yesterday, higher high, hitting the resistance level at 7240, but the hourly RSI print a lower high at the overbought level. So what it means that yesterday's upside momentum has started to deteriorate, or has started to wind off, potentially reducing the odds of a further extension of this ongoing corrective rebound. So with this bearish observation that's being seen on the hourly RSI over here, we will flip to a intraday bearish bias for West Texas oil using 7240 as my short-term pivotal resistance level. Near-term support level to watch will be 70.80/35. Only a breakdown below 70.35 may see further potential weakness to expose the next near-term support level at 69.10 next. However, if we start to see an hourly push-up and hourly close above 72.40, today's intraday bearish bias will be invalidated to see the extension of this minor corrective rebound sequence continue, exposing the next resistance level at 73.30, followed by 74 figure next, which is the minor swing high area of 4th of February and 11th of February. So i.e. in a nutshell, given the bearish observation that's being seen on the hourly RSI, we'll be flipping to an intraday bearish bias for West Texas oil for today using 72.40 as my short-term pivotal resistance level. All right, so that's also sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for other than the announcement of the 2nd of April Liberation Day US reciprocal trade tariffs. All right, so for today, during the European session over here, right, today will be Wednesday, will be rather quiet over here. So no major announcement on the economic data released during the European session, except that we come for before the start of the US session. That this tier 2 ADP job data, employment chain data, something like a prelude to this Friday non-farm payroll data. They'll be releasing at 8:15 p.m. Singapore time. Market is expecting we call it a uplift on the amount of jobs added. Market is looking at 105k jobs added, more above 77k recorded in the month of February. All right, so that's 8:15 p.m. Singapore time, and at 10:05 p.m. Singapore time, ECB official Lane will be speaking, and over here thereafter will be a quiet session. All right, so what we could see over here is that market will be focusing on Trump tariffs roll out, the reciprocal tariff roll out. So that will roughly the likely, I was high likely, will be released at 4 p.m. US time. So this US timing 4 p.m. today. So Singapore timing will be tomorrow, Thursday, early morning 4 a.m. Right, something to look out for. All right, so very important to look out for as well, I would say. So with that, that sum up today's daily dose of market insights. I'm Kelvin here, signing off, and I wish you all a great day ahead. And we shall speak again tomorrow. Thank you.